When a company drops news about a genuine, fundamental quantum leap, can the stock just ignore financial gravity? That's really the core question today as we plug into IonQ. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks, our mission. A deep dive into IonQ. We're using our research captured this morning, October 23rd, 2025, to cut through all the noise. We want to give you that strategic edge. Okay, let's try and unpack this. It's a pretty volatile situation.
Yeah, definitely volatile. And we're starting against a mixed macro backdrop, the pre-market open, mostly flat. It sort of reflects that ongoing tale of two economies you hear about.
Right, the strong GDP versus recession warnings.
Exactly. You've got strong Q2 GDP numbers, but then these recession warnings hitting nearly a third of the country. Plus, today's packed. Jobless claims, Fed speeches. Hesitation is kind of the market mood.
Okay. And right into that uncertainty, IonQ drops what sounds like a sector-specific bombshell.
Absolutely. They announced achieving this unprecedented performance milestone, quantum computing, dramatically cutting errors.
Moving closer to fault-tolerant systems, yeah. That's huge.
It is. And they also secured a major partnership, building a quantum hub over in Italy.
So this isn't just like an update. It feels like a potential game changer for them.
Potentially, yes. That's certainly how some are seeing it.
You can feel that enthusiasm, especially with institutional investors, Wall Street analysts. Overwhelmingly bullish.
Yeah, 75% rating at a buy or strong buy. They are absolutely focused on that revolutionary tech story.
Okay, but here's where the conflict comes in, right? The vision versus the valuation.
Precisely. This is where the story hits the wall of finance. And the conflict is profound. The tech narrative is fantastic, no doubt. But our research, looking at the current financials, the intrinsic value based on traditional projected cash flow, it's deeply negative.
Negative? How negative?
Somewhere between, say, -$7 and -$18 a share.
Wow. Okay, -7 to -18.
Yeah, and it's not just low. It reflects the huge amount of cash they're burning through, funding this, decade-long, highly speculative path to maybe being viable.
And the stock closed yesterday at over $55.
Over 55. So it's not just a disconnect, that's a chasm.
You really feel that absurdity, that gap in the sentiment too, because the bears, they are out in force.
Oh yeah, look at the massive short interest. 19.31% of the available shares sold short.
19%. That's a huge bet against this future success story.
It's enormous. And what's fascinating is how the options market is kind of drawing the battle lines.
How so?
Well, the put-to-call ratio, it's leaning slightly bearish, 1.09, and you see heavy call volume stacked up at the $70 strike. That's acting like a formidable resistance ceiling.
Okay, 70 is the ceiling, and below?
Below, the $50 strike has tons of puts loaded up. That's setting the immediate support floor.
$50. Got it. And the technical chart before this morning's news, it looked pretty bad, didn't it?
It was, frankly, ugly. The long-term uptrend was broken. Money was just pouring out, violently.
Right. But then this quantum news hits.
And boom, a massive pre-market gap up, around 14% higher.
14% jump.
And here's where the speed of that previous drop matters. Because the sell-off before this was so brutal.
Yeah.
Some technical momentum indicators, they're already flashing oversold.
Interesting. So the prior damage could actually reverse quickly if this news has legs.
Exactly. It suggests the technical damage might not be as entrenched if this momentum holds.
Okay, so let's bring it together. You've got this abysmal valuation, massive short interest, that's a serious double whammy of risk. How does the strategic outlook end up being cautiously bullish?
It's a fair question. Look, the risks are plain to see. The valuation's terrible, the short interest is high, the prior technical breakdown was real. But in a stock like this, highly shorted, totally story-driven, what you need is a catalyst, a legitimate, maybe even historic milestone to force a change in perception.
And this quantum record is potentially that catalyst.
We think it could be. It's powerful enough, specific enough, that it might just trigger a short covering scramble. It forces those bears to question their entire thesis, maybe cover instantly. It's the kind of news that has the power, potentially, to rewrite the narrative on the spot.
Okay, so for you, the listener, the immediate battle lines seem pretty clear then. Bulls really need to hold the line above $60 now, and they'll be targeting that $70 resistance we mentioned.
That's the upside target, yeah.
And the bears, they're going to fight to push it back down toward yesterday's close around 55. They'll be aiming for that critical $50 support floor.
50 is key.
And the absolute line in the sand, the point where this immediate bullish idea gets invalidated.
That would be a break below yesterday's low, $52.27. If it goes below that, the immediate bullish momentum from the news is likely broken.
Got it. So for IonQ, it really boils down to this ultimate question, doesn't it? Can the promise of a world record quantum breakthrough overcome, well, a world of skepticism and those cold, hard numbers?
That's exactly what the market's going to decide.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.